Hello everyone, here are the latest market news on July the 22nd, 2019. Asian stocks down on Fed rate cut expectations. Stocks in Asia decreased on Monday as investors scaled back expectations of an aggressive Federal Reserve interest rate cut. MSCI's broadest index of Asia-Pacific shares outside Japan declined 0.4%, while Japan's benchmark Nikkei closed down 0.2% on the more tempered Fedism views and caution ahead of the domestic earnings season, which starts this week. The Shanghai Composite Index was down 1%. Hong Kong's Seng tumbled 0.9%, and South Korean KOSPI was flat. Meantime, in early European trade, the pan-region Euro Stoxx 50 futures were up 0.06%. The dollar and U.S. Treasury yields rose on the greater likelihood of a smaller rate cut. The dollar index was steady at 97.174. The benchmark 10-year Treasury yield climbed to 2.062%. Oil prices rise amid Iran tensions. Crude oil prices rose on heat and Middle East tensions following Iran's seizure of a British tanker. Brent crude futures surged 1.55% to $63.44 per barrel, following an increase of about 0.9% on Friday. WTI crude futures advanced 0.77% to $56.06. Iran's Revolutionary Guards on Friday captured a British-flagged oil tanker in the Strait of Hormuz after Britain seized an Iranian vessel earlier this month for the raising tensions along a vital international oil shipping route. Meanwhile, gold slipped for a 6-year high as the dollar firmed and as expectations for a deep rate cut by the Fed were dialed back. Spot gold traded at $1,426.55 and once. Volvo recalls 507,000 cars due to risk of fire. Swedish automaker Volvo Cars is recalling 507 vehicles worldwide because of a faulty engine component that in extreme cases could result in a fire. The company, which is owned by China's Zhejiang Geely Holding Group Co., said its own investigations have identified that in very rare cases the plastic engine intake manifold may melt and deform. The cars being recalled were produced in 2014-2019 and have 2-liter 4-cylinder diesel engine, Volvo Cars said in an emailed statement. While the company has no reports of accidents or personal injuries, all customers will receive a letter asking them to contact their local retailer for corrective action. Swiss National Bank under pressure to ease rate. Swiss National Bank President Thomas Jordan is facing a new wall of pressure that could force him to push the world's lowest central bank interest rate even lower. The franc Swiss currency is already at the strongest in 2 years and likely to move higher as the European Central Bank outlines plans for loosening. A dramatic shift towards parity could even prompt surprise action by Jordan before the next scheduled meeting in September. That's something he's not been afraid to do before, notably in 2015 with the shock decision to scrap the cap of the franc. There is pressure on the S&B to act, said Credit Suisse Group AG economist Maxime Botteron, especially in the ECB cuts by more than 10 basis points. The franc has gained more than 3% in the past 3 months to about 1.10 per euro.